Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis. And this is daily analytical report where I will show you what's going on the markets. And well, surprisingly, we do have some decent trading occasions, right? It's the last Wednesday this year. And it's supposed to be quiet. Usually this week between Christmas and New Year's Eve is quiet. But we do have decent movements on the market. We do have interesting situations on the market. And traders can be happy. Traders can be happy with that. And we will see how it will go. But I will show you all the good setups today. No reason to go to the macro calendar. We can proceed to the charts because macro calendar this week between Christmas and New Year's Eve is rather empty, so no reason to go there. We can just focus on the technical analysis, and that's actually what the price is doing on many instruments. The price is moving very technically, which is good for me. I do have one position open, but you know it since last live training seminar, because it's American dollar to Singaporean dollar. So this pair that I have here, you can see this position because it's on a different account. This is my also real account, but used for daily analytical report. This one, which is used for trading, I show only during the live trading session, to avoid any problems. I just don't want to mess with that account during webinars. But I do have this position open. It's already protected on a stop profit order. So actually we can start with this American dollar to Singaporean dollar. As I said, it's a very technical situation. Singaporean dollar is stronger. Recently I look at this pair since the end of November, where we created a rectangle. So a very technical pattern bouncing from the horizontal resistance created by those supports, horizontal support here. After the breakout, the price created flag, also is broken support as a resistance. So very technical movements. And most recent development on this pair was the descending triangle pattern. So it has horizontal support and a declined resistance, and descending triangles are very strong technical formations. The same goes the opposite way with the ascending triangles. In descending triangles, you can see that there is a rising pressure on the support, and it looks like the support would not be able to defend itself in the future. So that's why there's a higher possibility of a bearish breakout and a bearish movement. And that's what happened today. Overnight, the price broke the horizontal support and went significantly lower. Stop loss orders were activated. Those who bought here, they most probably had stop losses here. So once the price went there, stop losses got activated and the movement accelerated. And the price went lower. If you're wondering how deep we can go, well, I think that the blue area is a good support for here, 15 pips, so not much. This pair is not very volatile. So in my opinion, that will be a good occasion to set the take profit order. Actually, I'm gonna do it now. So yes, you can see this is my order. Sell here. Even I sold this before this descending triangle. My stop profit order is already here. It's a very small position for this pair, so it's not so relevant. I'm gonna move first my stop profit a little bit lower, and then I'm gonna set the take profit order here. Let's say 460 euros. Right, so yes, I do have a minimum. I'm gonna earn 200 euros on that. The best scenario for 160 euros. I could have opened bigger position, but as you know, if you follow me for a longer time, my risk control and money management rules are very strict, and I open really small positions on the market. But anyway, let's continue with the daily analytical report. So we all know what's happening here, why the price is going down, what is the potential target. So let's move to the next instrument. Just euro to Japanese yen. We do have a kind of a positive sentiment here. Why kind of? Because we got a breakout of this horizontal resistance, but the price did not manage to defend it as a support. They are struggling. Maybe they will succeed, but so far it does not look. It looks good, but it does not look like in a textbook. So that's not like the best reversal in the world. It's alright, but as I said, it could be better. Price went deep inside, below the horizontal support, which shouldn't happen. And now buyers have to struggle to pull the price higher. Obviously, they can succeed. It's not that they cannot. They can. But for the proper trading signal, we have to still wait a little bit. New Zealand dollar to American dollar is now touching this resistance, this target, this aim that we are talking about for a long time, since the middle of December, since the 11th of December, when the price broke the neckline of the inverse head and shoulder formation. So that move was totally predictable, and if you follow our daily analytical report, you already know, you knew before that there is a buy signal here. Very technical setup, right? We had this inverse head and shoulder pattern, left shoulder head and right shoulder, breakout of the neckline, buy signal was triggered here, then a small correction, so a flag, breakout of the upper line of the flag, and a bullish movement. Why this is a potential target? Well, because of those lows, because of those highs. So yeah, that's quite an important level. Also 38.2, you always have to respect 38.2. So this is where we can get a small stop, where we can get a small break, and American dollar can gain a little bit strength, but we don't have to. The thing is that the price can continue to go down, to go up, break this horizontal resistance easily, and set new highs, new local highs. We'll see. So far, we still do have a positive signal, positive sentiment triggered on 12th of December. Next one is Bitcoin, which is stealing the spotlight of rest of the instruments. I'm listening many trading podcasts, television, etc. They always start with Bitcoin, and that's very interesting that we don't no longer care about oil, gold, etc. It's all about Bitcoin. The thing with Bitcoin is that we had this huge drop from 19,000 to 10,000. Obviously, almost 50% drop will be used by the people who didn't manage to earn on the Bitcoin before. There's a lot of people like that. Those people who missed the initial upswing, they were waiting for a deeper correction to jump in to this train and live the dream, right? And those who bought on 10,000 and have the Bitcoin now, for example, and they're gonna sell it, that's a really good deal. It's 50% in a few days. Pretty amazing movement, right? So that's why every dip on Bitcoin should be reversed, because every dip will be used by traders to buy more Bitcoins, to jump into this train. There's still loads of people who do not own Bitcoin, but they want to own Bitcoin. So maybe they will use another drop. The thing is that, yes, sentiment is back to positive. We are above the trend line, we are above the horizontal support. It's all good for Bitcoin traders. Dollar index is in a negative territory. We broke this dynamic support, then we had a flag. One of our clients pointed out on Twitter this head and shoulder formation. Fair enough. Yes, there is a head and shoulder formation, left shoulder, head, and the right shoulder. But from this formation, we don't have a trading signal yet, because we need to see a breakout of the neckline on the head and shoulder formation. So from head and shoulder formation, there is no sell signal here yet, but there is from the breakout of this flag and the price being below the orange resistance. Right? So yes, that's a negative sentiment for the dollar is on. Next one is Australian dollar to Japanese yen, which is showing us the power of false breakout. This is false breakout below the lower line of the wedge here and the horizontal support. Price went back above, and look at that, this is daily chart. After price went back above, we had only one bearish day and only bullish days here. So counting from here, from 13th of December, we got only one bearish day here. That's pretty amazing, that's pretty strong. And actually, from the reversal here from 7th of December, that was the only bearish day. Next one is British pound to American dollar, which I mentioned on the Trading Sniper video, and that's a decent setup. That's a very good setup. As I switched on, when I switched on my live trading account, you can see that I have a pending order there, waiting, long position, waiting for an activation. I will explain you why. That's an uptrend, price making higher highs and higher lows. Price is above the long-term uptrend line. Then the price defended horizontal support and price created a wedge formation. Or wedge with those lines, or let's say symmetric triangle formation, right? And we broke the upper line of the wedge or symmetric triangle, doesn't matter, which actually should trigger us a buy signal. But the thing is that still before buy signal, we need to break highs from Friday. And after breaking the highs from Friday, in my opinion, there will be a buy signal. Obviously, there is another resistance here, just behind the corner, 20 pips higher, which can destroy the bullish sentiment, which can stop the bullish sentiment. But I think buyers will be alright when they will break highs from Friday. There should be a buy signal. That's why I'm waiting there with my buy stop order. Next one, Canadian dollar to Swiss franc. Similar situation. There's an uptrend like on cable. There's a trend continuation pattern like on cable. On cable, that's a wedge. Here, that's a flag. We do have a breakout of the upper line of the flag, but which should trigger us a buy signal. But again, we do have those highs not from Friday but from 6th of December, and as long as we are below those highs, the sentiment still is kind of still there's no buy signal here yet. I saw so many false breakouts when the price broke the upper line of the triangle or flag or a wedge, and they stopped on the first horizontal resistance after that. I saw too many situations like that, so I try to warn you about that and protect you from that kind of setups. So once the price will close above the orange area, that's a buy signal. Next one is oil. That should be the story of the day, not the Bitcoin, because oil is on the highest level since the middle of 2015. Buy signal actually here was created here in the beginning of November when the price broke those highs from 2016 and 17. That was when the buy signal was triggered. Here buy signal was confirmed because the price bounced from the horizontal support and the recent upper line of the channel up formation, which after the breakout became a support. So it bounced from that, and then the price created a symmetric triangle. Symmetric triangle is a trend continuation. Well, with symmetric triangles it's complicated, so you always have to be keep your eyes open and stay focused, because symmetric triangle can result with a bullish or bearish breakout, and you should trade it once it's happening. And it happened here on Friday. We broke the upper line of the triangle. Then the price attacked the horizontal resistance created by yearly highs. Easy breakout. Now we do have a small reversal. What's the current most probable scenario? Well, that's the price reversing. And testing recent resistance as a closest support, like the price did already before. Once the price will succeed, once the buyers will succeed, that triggers a decent, legitimate buy signal on oil. Euro dollar, as expected, few flags in a row. One more time, upswing, flag, the biggest one, upswing, flag, upswing, flag, upswing, flag, upswing. You cannot make that up, right? The potential target is here. Yesterday, higher highs and higher lows. Friday, higher highs and higher lows. Today, higher highs and higher lows. We should see the price in this area relatively soon. And Australian dollar to American dollar. Here with this setup, I'm extremely happy. On Monday, I wrote an analysis about that. We had the symmetric triangle marked with an orange color, and we are waiting for the bullish or bearish breakout. In that paper on Monday, we said that the bullish breakout is more probable, and it should happen, it should eventually happen, and it did. The price went significantly higher without any disturbance, without any problems. The price went significantly higher, and now it's testing first horizontal resistance on 0.777, 7 created by those tops here, 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 that bottom here. That's as well like New Zealand dollar to American dollar and Australian dollar to American dollar. Those pairs are highly correlated. And Kiwi is on a horizontal resistance, and now Aussie is on a horizontal resistance. You may think that it's kind of a good occasion to go short, but so far we do not have any signals for a short. Just some people may be taking profits from the long positions. But it still looks, despite the price being on a resistance, situation still looks bullish. Next one, euro to British pound. Here I was expecting for more bullish action. The price broke this resistance and the trend line. I was expecting more bullish action. Well, they still have a chance as long as they stay above the orange area. There is a positive sentiment on this instrument. But it looks a little bit worse than I was expecting. Next one, American dollar to Canadian dollar. After that was beautiful setup. Look, false breakout here. Triggered a buy signal with a perfect target on the horizontal resistance here. They reached this target, they reversed. Now they are testing horizontal support. And breakout of that line triggers a sell signal with a potential target on 23.6. Next one is euro to Swiss franc. That's also a beautiful example of a false breakout pattern. False breakout pattern marked with a green color here. We had a breakout of the support, we had a breakout of the uptrend line, we had a breakout of the upper line of the wedge formation. And the price broke those levels, went lower, but then reversed, U-turned, and since that we do have almost all bullish days almost only bullish days in a row. Higher highs and higher lows, price aiming higher, most recently touching the upper line of the wedge formation, making new yearly highs. Actually we're on the highest levels. Yeah, we're on the highest levels since January 2015, when that market cap on 120 was removed. And we actually are getting close to 120. Yeah. New yearly highs on euro to Swiss franc as we speak. Pretty remarkable, right? Gold, one of my favorites. Gold is aiming for the perfect December. Gold is aiming for the good end of the year. Gold is recovering from the false breakout which happened in the beginning of December. Here, you remember that. We broke 38.2, we broke the lower line of the triangle, we broke the horizontal support, we broke long-term uptrend line. The price went to the first potential target on 50% Fibonacci and reversed. The price reversed with a wedge formation, which was normal, and was testing this 38.2 resistance. And that was a great occasion to sell. But I'm always telling that you have this kind of occasion, you would like to wait for the breakout of this pattern, right? So in this case, breakout of the lower line of this formation. This did not happen, and price broke the upper line, the horizontal resistance. It came back above 38.2, came back above the lower line of the triangle and above the trend line, and that denies the sell signal from here. That makes it a false breakout and that triggers major buy signal on this pair, on this instrument. Especially that, look at that, that's a wedge itself, green lines. Gold corrected 50% of the recent upswing, from the end of December and now is aiming higher. That shouldn't be a strong resistance. We do have a beautiful signal on gold, and till the end of the year we should see a continuation of this movement, and at the beginning of the year as well. American dollar to Swiss franc is aiming for a buy signal. Once the price will get to the orange arrow, we should get a buy signal then. Pretty much it. Now DAX. Other indexes are in a slightly better shape than DAX. DAX had a false breakout here. Everything was looking very bullish, but then the price reversed. Well, false breakouts are painful, they hurt, but at the same time they can be decent trading occasions itself. Price went below the horizontal support, now resistance, went below the mid-term uptrend line here. Now we do have like a rectangle which promotes a further downswing. Next one is Footsie. Footsie is shown, well, we had a descending triangle in the short term on American dollar to Singaporean dollar. We do have an ascending triangle in the long term on Footsie. So you can see that the buying pressure rises and the resistance is under the pressure, and we should see a breakout of the upper line of this resistance here in a bullish movement. That's more probable here. And S&P 500. Party goes on. Most recent development is a pennant formation here. Pennant is a trend continuation pattern, so we should see a breakout of the upper line of the pennant and new all-time, sorry, I need to adjust this uptrend line, and new all-time highs. Again, we are above the uptrend line. We are above actually the upper line of the channel up, so very, very strong, a strong situation here, promoting a further upswing. I actually like that, yes. So look, above the midterm uptrend line, above the upper line of the channel up, like on oil, and in a pennant. That's extremely bullish, and that promotes a further upswing. So as you can see, last Wednesday of the year, but still we do have decent trading occasions. Still we do have decent trading setups. It looks good. It looks good, surprisingly. You don't need macro calendar to trade. You just need to respect technical analysis. And on many instruments, we do have significant trading occasions. Thanks very much for watching Daily Analytical Report. If you want more trading occasions setups, visit our Twitter account and our website alpari.news, and our short break, and after that a webinar about MetaTrader 4. Thanks very much and goodbye.